Welcome back, everyone, to our English podcast. Today is a very special episode. We are going to explain everything. When I say everything, I mean everything about cryptocurrency and blockchain.
Yes, this is the episode people have been waiting for. If you've ever heard words like Bitcoin, Ethereum, blockchain, wallet, mining, DeFi, and felt confused, today we make it simple.
Very simple. No complicated language, no technical chaos, just clear ideas.
And by the end of this episode, you will understand how cryptocurrency works, why blockchain exists, how people make money, how people lose money, and how to protect yourself.
So, Sophie, let's start from zero. Imagine someone has never heard of crypto. What is cryptocurrency?
Okay, cryptocurrency is digital money. That's the first idea. It is money that exists only on the internet. You cannot touch it. You cannot put it in your pocket physically.
So it's not like dollars or euros.
Exactly. It's not printed by a government. It is created using technology, specifically blockchain technology.
Now, that word blockchain scares many people, but it shouldn't. Blockchain is just a system that records transactions in a secure and transparent way.
Yes, imagine a notebook. Every time someone sends money, we write it in the notebook. But here's the difference. The notebook is copied thousands of times across the world.
So nobody can secretly change it.
Exactly. If someone tries to cheat, the other copies say, no, that's wrong.
That's powerful.
Very powerful. That's why people say blockchain is decentralized.
Let's explain decentralized.
Decentralized means no single person or bank controls it. Instead of one central authority like a bank, thousands of computers around the world manage it together.
So Bitcoin is not controlled by one country.
No, Bitcoin belongs to the network.
Let's talk about Bitcoin. Why was it created?
Bitcoin was created in 2009 by someone called Satoshi Nakamoto. We don't even know if that's one person or a group. The idea was to create money that doesn't depend on banks.
Because in 2008, there was a financial crisis.
Yes, many banks collapsed. People lost trust in the financial system. Bitcoin was born as an alternative.
So Bitcoin says you don't need permission to send money.
Exactly. If I want to send you Bitcoin, I don't ask a bank. I just send it directly from my wallet to yours.
Let's explain wallet.
A crypto wallet is like a digital bank account, but instead of a username and password, you have something called private keys.
And this is very important.
Extremely important. Your private key is like the key to your house. If someone gets it, they can take everything.
And if you lose it,
your crypto is gone forever.
That's scary.
Yes, crypto gives you freedom, but with freedom comes responsibility.
Now let's explain mining.
Mining is the process of verifying transactions and adding them to the blockchain. Miners use powerful computers to solve complex mathematical problems.
And when they solve it?
They are rewarded with new Bitcoin.
So new Bitcoin enters the system through mining.
Exactly.
Now, here's something interesting. There will only ever be 21 million Bitcoin.
Yes, that's scarcity. That's why many people compare Bitcoin to digital gold.
Because gold is limited.
Correct. Scarcity creates value.
Now let's move to Ethereum.
Ethereum is different from Bitcoin. Bitcoin is mainly digital money. Ethereum is more like a platform.
Explain that.
Ethereum allows developers to build applications on top of it. These are called smart contracts.
Smart contracts. I love that word.
It sounds intelligent, but it's simple. A smart contract is a program that automatically executes when conditions are met.
For example?
If I send you money and the system confirms it, then automatically you receive ownership of a digital asset.
No lawyer needed.
Exactly.
Now let's talk about DeFi, decentralized finance.
DeFi uses blockchain to recreate financial services without banks. You can lend money, borrow money, earn interest.
All without a traditional bank?
Yes.
But is it safe?
It depends. The technology is strong, but platforms can have bugs. Hackers exist.
So research is important.
Always.
Now let's address volatility.
Why does crypto price move so much?
Because it's still young, the market is smaller than traditional markets. Big investors can move prices quickly.
So one big sell can drop the price.
Yes, and emotions play a role, fear and greed.
We've seen Bitcoin go from 30,000 to 69,000, then drop, then rise again.
Crypto moves in cycles.
So patience matters.
Very much. Now let's talk about stablecoins.
Stablecoins are cryptocurrencies designed to keep a stable value, usually linked to the US dollar.
Like USDT or USDC.
Exactly, one stablecoin equals $1.
Why are they important?
Because traders use them to protect profits. If Bitcoin rises and you make money, you can convert to stablecoin and lock in your gains.
So you don't go back down if the market crashes.
Correct.
Now let's talk about risks.
Okay, there are several risks: market volatility, hacks, losing private keys, scam projects, emotional trading.
Emotional trading is huge.
Yes, people buy because of hype, they sell because of panic.
And they lose money.
Often.
So what is a healthy mindset in crypto?
Learn before investing. Never invest money you cannot afford to lose. Diversify. Think long term.
Let's talk about regulation.
So governments are still deciding how to regulate crypto. Some countries support it, others restrict it.
Do you think crypto will disappear?
No, blockchain technology is too powerful. It may evolve, it may change, but it won't disappear.
What about the future?
We will see more integration with traditional finance, banks using blockchain, governments testing digital currencies.
Central bank digital currencies?
Yes, CBDCs, but they are different from Bitcoin because they're centralized.
So we come back to the big question.
Yes,
Is cryptocurrency a revolution or just speculation?
it's both. It's a financial revolution, but speculation is part of early innovation.
Just like the internet in 1995.
Exactly.
Final advice for beginners?
Start small. Understand wallets, protect your keys, avoid hype, learn continuously.
And never stop asking questions.
Sophie, I think now we should go deeper into something very practical. Let's imagine someone listening to us is actually using Binance or another exchange. What really happens when they start trading?
Good question. When someone opens an account on an exchange like Binance, Coinbase, or Kraken, they are entering a marketplace. This is where buyers and sellers meet.
So it's like a digital stock market.
Yes, very similar, but instead of stocks, people trade cryptocurrencies.
And the first mistake many beginners make?
They think trading is easy money.
Ah, yes, the illusion.
Exactly. They see social media videos. I made $10,000 in 1 week, but they don't see the losses behind the scenes.
Let's explain something important. Spot trading versus futures trading.
Yes, this is critical. Spot trading means you buy the actual cryptocurrency. If you buy 1 Bitcoin, you own 1 Bitcoin.
Simple.
Futures trading is different. You don't own the real asset. You are speculating on the price movement.
And you can use leverage.
Yes, leverage means borrowing money from the exchange to increase your position size.
For example,
If you have $100 and use 10x leverage, you are trading as if you have $1,000.
that sounds powerful.
It is powerful, but also dangerous.
Because losses are multiplied too.
Exactly. If the market moves against you, you can lose everything very quickly.
So for beginners?
Stay away from high leverage. Learn slowly. Start with spot trading.
Now let's talk about bull markets and bear markets.
A bull market is when prices go up for a long period. Optimism is high. Everyone feels rich.
And a bear market?
Prices go down for months or even years. Fear dominates.
Emotionally, bull markets are exciting. Bear markets are depressing.
Yes, but bear markets are where smart investors prepare.
Explain that.
In a bull market, everything looks good. Even bad projects rise. But in a bear market, weak projects disappear. Only strong ones survive.
So bear markets clean the ecosystem.
Exactly.
Now let's discuss protecting profits using stablecoins.
This is a very important strategy. Imagine Bitcoin rises from $30,000 to $60,000. You invested early and doubled your money.
Many people don't sell.
Yes, they think it will go to $100,000 immediately.
Greed.
Exactly. Then the market drops to $45,000. Panic starts.
And profits disappear.
But if you convert part of your position into stablecoins at $60,000, you protect gains.
So stablecoins are like a safe parking area.
Yes, you step out of volatility.
And then if the market drops more, you can buy again lower.
That's strategic investing.
Let's introduce another concept, market cycles.
Crypto usually follows a 4-year cycle connected to Bitcoin halving.
Explain halving.
Every 4 years, the reward for mining Bitcoin is cut in half. That means new supply decreases.
So less new Bitcoin enters the market.
Yes, and historically, after halving events, strong bull markets follow.
Because supply decreases while demand may increase.
Exactly. Basic economics.
Now let's talk about altcoins.
Altcoins are all cryptocurrencies except Bitcoin.
There are thousands.
Yes, some are innovative, others are scams.
How can beginners identify good projects?
They should ask, what problem does this project solve? Who is the team behind it? Is there real usage? Is the token necessary for the system?
Very practical questions.
Also check token supply. If supply is extremely large, price movement behaves differently.
Now let's talk about security.
Security is everything in crypto.
Hardware wallets?
Yes, a hardware wallet stores your private keys offline. It is much safer than leaving funds on an exchange.
Because exchanges can be hacked.
Yes, not your keys, not your coins is a famous phrase.
Let's explain that.
If your crypto is on an exchange, technically the exchange controls the private keys. You don't. So self-custody gives more control.
Exactly. But again, with control comes responsibility. Now let's talk about psychological discipline.
This may be the most important part.
More important than technical knowledge?
Yes, many people know the theory, but emotions destroy them.
Fear and greed again.
Yes, when price drops 20%, people panic sell. When price rises 50%, they buy impulsively.
So what should someone do?
Create a plan before entering the market. Decide when to buy, when to take profit, when to cut losses.
And follow the plan.
Exactly.
Let's imagine a beginner named Daniel.
Okay.
Daniel hears about Bitcoin from friends. He invests all his savings during a bull market peak.
That's common.
Then the market crashes 40%. Daniel panics and sells at a loss.
And then 6 months later, the market recovers.
Daniel feels regret.
This is emotional investing.
So what would a disciplined investor do differently?
They would invest gradually, maybe use dollar cost averaging, buying small amounts regularly.
So they reduce timing risk.
Exactly.
Now let's discuss the future of blockchain beyond money.
Blockchain can be used for supply chains, identity verification, voting systems, real estate, intellectual property.
So crypto is just the first use case.
Yes, blockchain is the deeper innovation.
Some people say blockchain is like the internet in 1990.
I agree. Many experiments, some failures, some future giants.
Now let's address a big question many listeners have.
Which is?
Is crypto halal? Is it ethical? Is it legal?
Interesting topic. Legality depends on the country. Some countries regulate it, others restrict it.
And ethics?
Crypto itself is neutral technology. It can be used for good or bad.
Like the internet.
Exactly.
And final deeper question, will crypto replace banks?
Not completely, but it will force banks to evolve.
Competition improves systems.
Yes, and financial inclusion may increase. People without bank accounts can access global finance with just a smartphone.
That's powerful in developing countries.
Very powerful.
If someone listening right now wants to start, what are the first 3 steps?
Step 1, learn. Watch educational content. Step 2, open an account on a reputable exchange. Step 3, start small and secure your assets properly.
And always remember, high reward comes with high risk.
Yes, there is no magic money,
Crypto is opportunity,
but also responsibility.
and knowledge is your best protection.
Always.
In the next extended episode, we can go deeper into advanced trading strategies, staking, passive income in DeFi, and long-term portfolio building.
Yes, and we can also explain how to analyze charts in simple English.
That will be powerful.
Very powerful.
If you stayed with us until this part of the episode, you are serious about understanding crypto.
And that already puts you ahead of many people.
Keep learning, keep questioning.
And never invest blindly.
We continue this journey together.
Step by step.
See you in the next deep dive.